CoreLogic says capital city house prices rose 1.4% last month to be nearly 13% higher for the year, but it is a tale of two halves. Prices in the country's west have fallen in the 12 months to March. The median price in Perth is now $475,000. In the east, prices have risen. Even Hobart's annual gain is above 10%, so too Canberra. But Melbourne and Sydney are continuing to surge. Sydney, the strongest in 14 years. In Sydney, house prices haven't grown this fast since November 2002.
The amount of stock actually available for sale relative to recent years is quite low, so that's creating this sense of urgency in the housing market.
Strong population growth is also increasing demand, even as the banks lift mortgage rates.
People have got a lot of equity in their properties and they're looking for some sort of return, and at the moment housing is offering very good returns relative to other asset classes.
Today, the Bureau of Statistics said the number of homes approved to be built across the country reached a 6-month high of nearly 19,000 in February, but retail sales fell a worse than expected 0.1%, highlighting the Reserve Bank's delicate balancing act.
So the RBA and Tuesday will be very much remaining on hold, with any focus around trying to control the housing market coming through controlling credit conditions, or what they call macro-prudential.
The Australian Securities and Investments Commission is now joining the banking regulator, cracking down on interest-only loans.
We will do a targeted surveillance of lenders to make sure that those lenders who are providing home loans are not providing interest-only loans in a way that's unsuitable.
In the meantime, consumers are getting a slight reprieve in the form of lower petrol prices. The Australian Institute of Petroleum says the national average for a litre of unleaded fuel fell more than 3 cents per litre last week, the biggest weekly fall in 8 months.